Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is August 28th, 2018, and we're going to take a look at the 10-year notes here. The long ETF is IEF. Now, the trends are still pointing to the upside, but I'm going to have more of a cautionary tale here this evening so you can see how some of the systems have been making some adjustments, and it certainly is not being picked up by these simplistic indicators for short, intermediate, and long-term trends. The technical rating is now negative, and we just recently, to today's action, had the wave high that triggered. So there's been a number of things that have starting to change here in the technical rating. Obviously, we've got an overbought, oversold type indicator with the wave high having triggered. If we come over to some of the patterns, this has been happening for a while, where we've had in the 10-year notes a profit taking from 2 trading bars ago. We have a reversal indicator from 2 bars ago, a T-rope, which is an indicator that deals with specific moving averages and how they relate to them. That occurred 3 trading days ago. So there's been some things that have been talking about and looking for a bit of a high in the market. Along the same lines, now these are on daily bars here for the 10-year notes. If we come to the weekly, we have a few more markets, but I just want to point out that the 10-year notes, if we come all the way over here to a lazy day, now these are weekly bars, but 13 weeks of non-overbought or oversold condition, we start counting those types of scenarios, because that generally is a good indication that something big is going to happen, especially when we're dealing it on weekly bars. Just to show what that looks like, let me show here. Here are weekly bars for the 10-year notes, and you can see that our elastic level hasn't been overbought above the magenta or below this blue line for quite some time. So we start to track that, and whenever we have that type of a condition, it typically means that the market is going to have some type of an explosive move. Now, it's slow moving, and it's not the type of thing that it's going to tell us exactly when, but it is something that we start watching this, and so we have lazy day and lazy week type scenarios. So right now, you can see this little downtick here. This is to this week's worth of trading. And look at this big support level to the market. If I go all the way across here, you'll see that we're basically sitting on it right now. In fact, we're just a tick below it. So my last tick here in the 10 years is at basically 120. And this is at 120 and 10.5 ticks. So that being the case, we're looking at it basically just a hair below. It's not to say that this evening and or tomorrow we can't break back above that, but we are toying with this major weekly support. If we take a look at a daily bar, you can see that we're coming down to and toying with the 50-day moving average. Just another thing you can look at. Point being, if the market really starts to break below the 50-day and that other support level I just pointed out on weekly bars, we've got some room to fall here, and we could be looking at least on daily bars. There's going to be multiple levels here, but the most recent one would give us down to 119 even. So just to give you some perspective as to where the market could fall to, this is what we're going to be looking at. So I'm basically showing you this market because we're at a point right now that almost anything can be happening here, and with the systems the way that they are, I'll just show this to you. We're now hedged. We've been long with a daily system for a little while. Got a nice little per contract basis up around 1500. We're now short the market with a position that entered today. So we got a nice little, well, barely, but we're up $141 per contract here. So we're now hedged with a long and a short. We liquidated another long position. I can show that one to you as well. We'll go to exit signals, but we exited a long position earlier in the day for the 10-year notes, and that one made about $550-ish or so. and that one was a 240-minute long. So that being the case, what is taking place here is that we're starting to hedge ourselves. We're coming down to these support levels, and what we want to be able to do is just simply prepare. Watch the system. Something is going to start to happen here. I would suspect that we're going to get more action here with the a little more volatility that's going to start to pick up here, and we could see a little bit of a sell-off. The momentum to the market, and a lot of these indicators are still kind of looking more at the short side than they are the long side. As I mentioned, those key levels of support, the 50-day and that other level that I gave to you on the weeklies, we're basically there now. So I think we're going to start to see a little bit of a pickup here. And if we don't, that's to the downside. If we don't, then we'll see how it kind of reacts to these support levels, and then probably have another opportunity for them to sell off once again. So do watch the systems. Let's see how things kind of play out from that side, and just expect some fireworks here in the 10 years, the 30 years, and the 5 years, and look for some really good opportunities from that side. So thanks for watching, and we will talk to you soon. Bye-bye.